Investors and traders, welcome to the channel Market Chart Pattern. Today is 14th of October 2023, and I hope everyone is having a great weekend. In this video segment, we are going to take a look at the key US banking stocks. We will actually start by taking a look at the KRE, which is the Regional Banking Index. We'll cover XLF, the ETF for financials. We will then also take a look at the individual key banking stocks. This video is for educational purposes only, and it is not a financial advice. So what we are taking a look at is the daily chart of the Spider S&P Regional Banking ETF. This is the ETF which is a collection of regional banks, which are smaller banks compared to some of the really big banks such as JP Morgan, Goldman Sachs, etc. This is also the index which is really important to watch because when the Silicon Valley incident happened, it was already giving us indication as early as February. And in fact, if we just take a look at going back the January of 2022, we can see that there was like a it had been selling off actually. And then the beginning of the year, what we began to see was stress come into this index. It began to sell off, and then in early March, we can see this is when the news broke out about the Silicon Valley Bank, that it just collapsed really quickly within a few days. So after finding support, we had been watching for a key pattern, and the pattern was this 1-to-1 price projections ABCD, right at to the 50% retracement. This is where it went. We have the 200-day moving average declining, and what we have seen is that the market found resistance right from this ABCD pattern formation, the 1-to-1 price projection. I haven't labeled it as a 1-to as ABCD, but the followers of the channel know that this is the 1-to-1 price projection, which we really like to follow on this channel. And what the index has done is just been selling off since late July, and where it is trading at the moment is right at the 61.8% Fibonacci retracement, and this is where it has found some support. We had a week and a half trading week rally, but look, last Friday there was quite a bit of selling pressure which has come into this market. And also what we are seeing is basically 200-day moving average and the 20-day moving average is below the 200 days. So from a momentum perspective, the momentum is also negative. So this ABCD price projection was in fact a bear market rally. It completed its pattern, and it looks like the price is now moving lower, breaking below these lows. There's a good chance it might actually go and test these lows around $34 per share level, roughly speaking. Let's take a look at XLF. So this is the daily chart of the Spider Select Sector Fund Financial Index. Here, one of the things that we were watching for was this channel formation here, and at one point, this is the time frame when the Federal Reserve injected about $300 billion or more into the financial system, and at that time we had actually forecasted, because the liquidity coming into the marketplace, we could actually see a rally in the banking stocks, and we had drawn this this pattern formation highlighted in yellow. That was a very nice pattern formation where we had a 1-to-1 price projection coming right here around this. I believe it is the 78.6% Fibonacci retracement thereabouts, and we saw a nice trend line as well, which was providing support. It took a while, but we saw a rally where it went exactly to the 78.6% Fibonacci retracement, wasn't able to take that out, and this channel formation actually also got broken down. What we have is something similar to what we have for the regional banking index. Here from a momentum perspective, price is below the 200-day, and also just hovering a little bit below the 20-day moving average as well. So this 61.8% Fibonacci retracement did provide some support. We did have a little bit of a rally, but a week and a half trading week rally, but it looks like maybe that more positive momentum to the upside might be actually failing now. And if you just look at the previous rally that had taken place in this, in terms of microsymmetry, we have rallied to the same, and it looks like actually it might be actually also going down towards this $31 per share level, and maybe even lower to about $30 per share level, 30-31, and below that, there are further targets as well. But what is key is the 61.8% Fibonacci retracement should hold for it. If it doesn't, lower prices. Okay, so after covering the broader ETFs, let's take a look at the Goldman Sachs. So this is one stock that we have been following for quite a long time, and here the comments from before have been Goldman Sachs bearish symmetry still in play. There was a point where it did look like that the bearish symmetry was broken, because we had this pattern where whenever the price was rallying about this much, it would actually get sold off, and what we saw was that this pattern was broken, and we did have a rally where it took the stock higher, but in an ABCD uh, um, fashion, which is the one-to-one price projection, and we had highlighted this zone to watch, and it went right up to this 61.8% Fibonacci retracement of these highs. So there we go. It was too much resistance for the stock because of this one-to-one ABCD price projection highlighted in brown, plus the 61.8% Fibonacci retracement coming in, and we have seen the stock actually get sold off. Now, just a little price projection where we are now. So it has done a one-to-one price projection lower right here where we have these lows as well. So let me actually try to draw a line here. So it's not a double bottom formation yet because there is no confirmation for that. But this is also a level where we have some structural support, and if this support gives its way, or in other words, the price actually on a at least two consecutive daily basis moves below this, then one of the longer term pattern that we had been following for quite a long time, in fact beginning of the year, is this one. Let me actually bring it here, and we could in fact see about $240 roughly speaking, 240 to $243 in the Goldman Sachs. And then this is going to be a pretty strong support, because we have a number of things coming together to form a confluence level. We'll have a 61.8% Fibonacci retracement and a one-to-one ABCD pattern that we like to follow. That should give it a pretty good support. And this is just the weekly chart, and on the weekly chart what we can see is where the price has been closing last week is right at the 200 week moving average. So we are finding some level of support here, but the chances are that this actually stock is most likely following the blue pattern that we mentioned here, and $240 $243 level is something that we should be watching for. If that level of $300 per share level is broken to the downside. Let's take a look at JP Morgan. So the JP Morgan stock, you can see just from the price action perspective, has been performing much better compared to the Goldman Sachs. I believe there were earnings out last Friday. We see the market rally. Let me just blow it up a little bit, and which was a good thing that when the stock opened up, it had a gap opening, but look, it just began to sell. So sellers came in, and let's have a look at what level actually these sellers came in. To our surprise, right to the 61.8% Fibonacci retracement. Let me actually also write it 0.618. Let's make it smaller, maybe something like 24 should be okay. There we go. So the other thing that I want to mention is that when the stock began to rally around here, which is when the Federal Reserve actually started to inject about $300 billion in the financial system. At that point, we were watching for this level because it was so close to about 38.2% Fibonacci retracement. And when the stock began to gap up higher, we were looking for higher prices. Initially, we were looking for a touch of double top kind of formation because of 61.8% Fibonacci retracement. The stock had actually done pretty well. It went right up to the 78.6% Fibonacci retracement of these highs. Here we go. And that level was just too much of a resistance for the stock. And we have seen the stock sell off. So let's take a look at what level are we at. So from this level, we have yeah, so it looks like there's a chance that this stock is actually going to go down to about $137 per share level, because that's the 38.2% Fibonacci retracement. And if this level is broken to the downside, and then we have the further downside levels maybe coming back into this range somewhere. So we'll be watching that. Let's take a look at Bank of America. So this Bank of America stock, we had been watching for the support zone here. We had our patterns identified in advance. The stock did a rally. So this is the rally taking place, from end of March after the Federal Reserve's actions, but it wasn't able to take out the 61.8% retracement and 50% retracement of this. 61.8% retracement of this and 50% of this high. Too much resistance for the stock. And then this is the zone that we had identified. It's just come right into that zone. We have this channel formation as well, so there are chances actually, in fact, the stock could go and touch the lower end of this channel as well. So going below the 20, roughly speaking, $25 per share level would actually be breaking the 78.6% Fibonacci retracement, and then that's not going to be pretty good for this stock from a price action perspective. Let's take a look at Morgan Stanley. So Morgan Stanley was one of the stocks which was from a price action perspective, it was behaving much better. Some of the compared to some of the other banking stocks that we're looking at. So we had this nice channel formation. We did see some nice rallies as well, but this stock has also face resistance. It's just moving lower. We think that where it is right now, this is the 78.6% Fibonacci retracement of these lows to these highs. Breaking below this, the initial ABCD or one-to-one price projection that we were looking for, and we have a gap from 21st of December as well. Looks like the $65 per share level. That's where the stock is going, about $65 to $60 per share level. So this is what we are watching for. Looks like this pattern might actually, in fact, get completed now. Otherwise, this stock really needs to find really good support from the 78.6% Fibonacci retracement. Otherwise, the gap from 21st of December is most likely to get filled around anywhere between $65 to $60 per share level. Let's take a look at Citigroup. So the Citigroup price action, you can see, is it's just not looking good at all. There have been a few attempts to rally. Each time one price projection is not able to move higher, and it's just been trending lower. We have this trend line like this. It's just stock is just breaking the lows from here. So the chances for this any rally, if there is going to be a rally from a symmetry perspective, it might just try to rally up till here, about $50 per share level. Most likely face a lot of resistance. The chances are it is actually, the stock is also moving towards $32 per share level. Let's take a look at now Wells Fargo. So the Wells Fargo stock, this is a very interesting stock because just like Goldman Sachs, it appeared that it might have actually broken its bearish symmetry, which is this black line. Every time there was a rally of this much magnitude, the stock faced too much resistance and got sold off. We did have, there was a chance that perhaps this was broken, but what we have seen is that it was just an ABCD or one-to-one price projection higher, and it just got it did a one-to-one price projection right here, and the stock has moved is moving lower. um, so the chance is that it is in fact going towards the $36 per share level, just because it's the one-to-one price projection lower. Also, let's try a 78.6% Fibonacci retracement, which might actually provide a little bit. Yeah, so anywhere between $38 to about $36. There could be a potential good support for the stock, but looks like this stock might actually be following this purple line ABCD one-to-one price projection lower, which could in fact see the stock go and touch about $34 per share level, which is 61.8% Fibonacci retracement. Some support there, but pretty good support around the $27 per share level. So this is what we are watching in the key US stock banking stocks. So the by the looks of the pattern in the price action, it does look there is stress in the financial stocks. So this is something that which we need to keep in mind. The interest rates have been moving higher, so the banks should be making some profit on loans and stuff. But of course, there's a lot of debt which has been put out in the system as well. So we just need to be watching the price action and try to look at what the charts are telling us from a technical analysis perspective. So this is what we have been looking at. So we have covered the key US banking stocks. We also covered the regional banking index ETF. We also covered the XLF, which is the banking ETF. If you like our analysis, how we look at the markets using pattern recognition and Fibonacci retracements, price projections and expansions, please do subscribe to the channel. And if you found this video of good value, then please also click on the like button. Thank you very much. Good luck and good trading.